So hi everyone. I'm here with Manu Peleteiro. He's the co-founder of InBest, and InBest are in the income maximization and benefit calculation space. So Manu, thanks very much for joining me today.
Thank you, Chris, for having me.
So great. So it'd be good to just chat. Maybe just start off, talk a little about cost of living and some of the things you've been seeing around cost of living, particularly around your clients, and sort of what people are what people are asking for.
Well, the main discussion in the industry, of course, is the cost of living and benefit space. Is this so-called 8 million people unclaiming benefits, so missing 16 billion in total. This is particularly important right now because normally these people who are missing benefits are people who previously didn't need any welfare support, and they just thought it was not important to look after these benefits. But now they find themselves they don't have any other option, and they really need to look for any possible source of income, and they're looking for these benefits.
And how much of a gap do you think there is in terms of people knowing what benefits there are and then being able to claim it? I mean, you say a lot of people sounds like a lot of people sort of didn't go there, but they were actually entitled to it. I mean, so how much of a gap do you think it is generally across the population? Obviously, it's becoming more widespread in terms of knowledge with systems like yours.
Well, as I mentioned, this wide industry figure is 8 million people missing 16 billion in benefits, which is £2,000 per year per household. But according to our data, this is much bigger than that. According to our data, our customers are missing £5,300 a year in benefits.
And do you see any that sort of like broken down by any kind of like demographics, or is it people like is it the idea around sort of like the idea of like the people in work, they're not in work? I mean, where do you think that mainly kind of sits in terms of the people who are missing out on benefits, which really I suppose affects the income line on the income expenditure?
Yeah, certainly. There are some certain characteristics that really increases your chances of missing some benefits. Traditionally, people who claim and make sure they were getting all their benefits, of course, are unemployed people. They knew the welfare system was there to support them. But people who tend to or have more chances to missing benefits are people on low income, because they assume, hey, benefits are only for unemployed people, and they don't even check their benefits. So they certainly missing benefits, especially people who are renting, or people who have large households, or people who are caring, and they are not aware that the welfare system can go a long way on helping them out, but they just believe there is nothing for them. And then there is another segment who are traditionally missing lots of benefits, are pension credits. So elderly adults missing support available for them, and the system also is quite generous for this segment of the population.
And I suppose if you look at the cost of living crisis, it feels like it's sort of like going upstream, and there's mention on the radio around sort of like the working poor, I suppose it is. I mean, and I was chatting a little bit with like the credit union sector as an example, and people are sort of starting to see almost like it's not that there's been a huge shock as much as there's a creeping shock for people, and it's moving up almost like the income range. And so do you think these are the people that should be claiming benefits, or that they're not claiming benefits today, but they're probably entitled to it, and that might be a solution for that segment at least as much as the wider population?
Yes, couldn't agree more. Absolutely. So here we are talking maybe households who maybe a year ago they were not doing great, but they certainly had some saving capacity, and they were managing their finances all right, and they felt that they didn't need any support from the welfare system, and they never checked benefits. But now, as the cost of living goes, bills increases, energy cost increases, so this extra saving capacity just went down. It is in many of these cases probably they already cut some superfluous expenses, and there is nothing else they can really cut. So they really need to look some additional sources of income they can get, and benefits, of course, is an ideal candidate because they don't have to work more, they can keep with their existing duties, and they can claim what they're eligible for and what they rightly can claim.
I mean, I think the energy crisis, particularly. I mean, there's only so much you can save, isn't there? I mean, you can't. I mean, you can only cut so much. I mean, you can cut down on energy, but then if it links through elsewhere, then it becomes a challenge, right? So I suppose like benefits, I suppose is kind of the option for that, and the income maximization will be an option for them.
Yes, absolutely.
And where are you seeing this sort of mainly being taken up? Because obviously it's applicable across wide sectors, but are you seeing that your customers or the ones that are generating the most interest are particular sectors, or because it does affect the wider population, but I suppose some of that population can be concentrated in particular sectors more than others. Credit unions being one, can be, but it could also affect other companies like utilities, I'd imagine.
Yes. So here normally is a combination of things. First of all is how each company, the individual strategy of each company. Of course, you have some companies that have financial inclusion as a core strategic objective, and of course these companies, whatever sector they are, they might be interested on that. There is also industry traction, so some industries, either because of the regulator or because industry groups, industry associations, or for example the great work of Fair for All Finance, like in government associations, they drive change and they kind of drive the implementation of certain standards on that industry. For example, we can see that in three industries very clear. First of all, affordable lending and credit unions. Of course, these companies have a strong social mission, and they are there to help customers. They're not there to just underwrite loans. They're there to help people, and loans is a product to help people, as is savings, as is financial education, as is many other great services they offer. And then above that, of course, you have Fair for All and Responsible Finance, AFCOOL organizations that also try to drive change across the sector, either providing organization, sharing best stories, and sharing also providing some funding. Then other sectors, in the debt advice sector, it was most the work of the Money Advice Pension Service, because the Money Advice Pension Service make it clear that they are expecting to have income maximization as part of the debt advice process. So here it was more this great stakeholder, Money Advice Pension Service, who said, "Hey guys, if you want to work in the debt advice sector in England and the rest of the UK, you guys have to add this feature as part of your platform." And another sector we are seeing a lot of interest also is in the utility sector, especially in water, because the water regulator also make it very clear that they are expecting to have benefit checks, not just for water tariffs, but also for the wider welfare support. So it's always a combination between individual companies, the industry associations, government agencies, and
the regulators sort of like helping to push some of it through in terms of interest across the wider sector, it sounds like.
Yeah, it's also a combination of factors.
And one of the features that we've been chatting about, I suppose, is the digitalization and like how it links into systems. I mean, how much of a barrier do you think that's been in terms of knowledge of benefits and availability of benefits? It feels like that's part of the opportunity in terms of being able to give people access to the information quicker to a certain extent to know whether they're eligible or not.
Yes, especially in the segment we are talking about, these people who are never claimed benefits before because they never need it. Most likely they don't even know that the benefits are there for them to claim, because and also the existing organizations that offer welfare support, like citizen advice bureaus, local councils, the only service they offer is benefits. So if I believe I don't have any benefit, why would I go and talk to these companies? In my eyes, they don't have any service I can use, right? So why would I check? So that's why we believe it's very important to embed the benefit checks within existing journeys to identify people who are missing benefits and proactively let them know, hey, you're missing some benefits, please go and check.
Yeah. And how do you find best going around that, I suppose, in terms of like embedding that into the systems? Because I think it's there are benefits calculators out there, and I suppose it's like, but what's the best process in terms of getting the best response rate? Thinking about how to embed these processes into your collections process or into your acquisition or your loan adjudication process, your affordability kind of process assessment.
So first of all, it's very important to select the user journey. So in which journey you're going to add this benefit check. For us, lending is a fantastic example because you have a customer who needs money, who is willing to introduce the information, who is taking some proactive action to claim this money or to get some extra money. So as they are going through the loan process, they're also ready to take some action to go and apply for the benefits if something is available for them, as it is step advice as well. So we have certainly one person who is ready to take action. So it's someone who was under stress, under financial stress, but it's already a point where he is not sticking the head into the sand, is ready to take action. So those are the best journeys for us. People who need money and people who are ready to take action and go and apply for this.
And what do you see in terms of, I suppose, integration into your customers' systems in terms of like how they best do it versus they don't do it? I mean, I know you offer a white label service, but you must see different instances of how that then gets integrated into their system, and I suppose examples of where you've seen really good practice.
So that's why we offer a lot of integration options. So we offer from super simple white label iframe integration and all the way to full API that you can build the whole platform on your end. The only thing you use from us is the benefit calculator, so the actual engine. So for us, the best practice really is always a step-up approach and try and learn. So the best practice is always starting with, doing a test case, either sending an email or adding the benefit calculator somewhere in your digital channels, whether it's in your financial wellbeing portal or your blog post about benefits, and then start learning who are the customers who look at the benefits, what are their financial circumstances, situation, and then start to the team as well, because this is also a learning process for the teams themselves, because most likely people who are embedding these tools, they never claim benefits themselves. So they need to understand a bit better how these tools, why it's needed, and so on. And then from there, a step-up approach to integrate it in one part of the journey. We have also a very simple integration, and then you can integrate further and further until the provider has, or the lender or the debt advice company has built really everything on their end, and the only thing they use from us is the API. So that's, for us, is the best practice.
And maybe just chat to me a little bit about interface and your philosophy around interface. So I did see an earlier example of your calculator, and I was starting to go through it. I mean, but it's a very simple interface at the start. I mean, is that sort of a principle, and it's sort of like then sitting around, I suppose, things like analytics at the back? I mean, what's your sort of like principles around that, or philosophy?
Yeah, well, my philosophy is simple. People hate forms, and people hate input information. People, me included. So I don't want to make people go through something I don't like to go. So yeah. So our first principle is breaking down the questionnaire in two parts always. Either first an estimation, so you give people an early reward, so they introduce 4 data points. And they get an early reward. They don't have to answer 15 questions, answering your postcode, your income, how many kids, gender, giving pretty much everything before giving them anything in return yet. So ours is like, okay, answer me 4 simple questions and I give you something already, right? And hopefully with that early reward, you incentivize people to complete the full calculator, because this is something we learned very early on. So when we set ourselves to build this benefit calculator, the first thing partners told us, the drop rates are huge, right? Like so many people drop during the questionnaire. So we had very clear from the very beginning that was one of the most important features. Or one of the main problems we need to address: how to make people to convert through the whole questionnaire.
And so that's almost like you also have this like pyramid approach, which is ask the questions, but then there's a reward as you start at the top that then sort of kicks you onto the next stage and the next stage and the next stage. So it's sort of like you go down the pyramid with incentives, I suppose, or as you go down through the pyramid.
Exactly. That, and also dynamic behavior, in the sense the questions you ask at the beginning of the questionnaire impacts the questions you will be asked as you progress through the questionnaire. So we make a lot of effort to make this dynamic behavior, so we don't ask or we don't display information that we don't need.
And how much, I mean, just on a wider basis, I mean, how much of a problem do you think that is in terms of forms you see in the industry? I'm thinking back to some of the back in the old days in terms of the old I&E type forms or the SFS forms, and you can sort of like you can almost get overwhelmed with information that's required. I mean, you can tell I dislike forms as well, I think.
Yeah, the any form is notoriously lengthy and heavy to fill, So probably that's just Chris mentioned, the heaviest, most lengthy form to fill. In benefit calculators, I think that the standard is quite high. So I think all of the benefit calculators in the market have a pretty good UX and quite neat, because I think all of us acknowledge the challenge of making people to complete the whole question.
But I suppose it's quite a good. Just thinking it's quite a good design principle in terms of thinking about how you go through customer experience in terms of like that rewards, almost like pyramid, in terms of designing these journeys, because it's we do tend to just sort of put everything out there, and then I expect customers to kind of complete it.
Mm-hmm. Yeah, absolutely. Yeah, another important principle you touched before is analytics. So what we do is we have a very clear analytics of the conversion screen by screen, and when we see a screen that has higher drop rate, so we make a lot of effort on that screen to make it easier to navigate, and making A/B testing to see how we can improve that specific screen. And now we are very lucky because there are so many tools that you can use, from Google analytics tools, product design tools that help you to kind of optimize every screen.
Looking at it's that feedback loop, isn't it? It's like, how do you then create the feedback loop and just keep on iterating and keep on just really to try and get it better and better and better. So what about things like open banking? So I think you use open banking within your process later on in the process. I mean, how do you sort of see that being sort of integrated, and what's the use case of open banking in terms of looking at things like affordability, I suppose?
Yeah, we love open banking. I think the combination of our engine with open banking is very powerful. And we have the best example. One of our biggest customers called Salad Money, and they use open banking exclusively for the affordability assessment. And thanks to that, they can use open banking data to view the benefits you are already getting. So they know very well whether you're getting universal credits, children benefits, whatever benefit you're getting. You can see those transactions very, very clear with open banking. Then they use our engine to calculate how much you can get. And then it's just a matter of making the difference of the extra amount you can get. So this is the first benefit, increase the awareness and really proactively find people with unclaimed benefits. Second part, and this is more the regulator, or not the regulator, sorry, this would be more the benefit given authorities like DWP or local authorities, local governments, using open banking to validate people's income, because one of the main variables for the benefit assessment is the income. So with open banking, you can really accelerate and improve income verification, and you make sure that you are giving benefits to people who deserve those benefits, and you really accelerate the processes. You don't have to go through bank statements in PDF. You can really automate that process.
And I suppose that speaks to a little bit around what you're saying around reducing the amount of form filling you have to do, sort of like, and you can do that sort of because you can get that information, and particularly the transactional information, it sounds like.
Yes, exactly. And the third aspect, that the third feature of open banking is helping you to monitor the benefits. Benefits are not one-off thing that you do and you forget about it. You really need to look after your benefits all the time, really. If your circumstances changes, your income changes, you need to update your benefits. And open banking can help you to monitor that and make sure that you're already claiming the correct amount and you are getting all benefits you deserve.
And I suppose for this stage of the a customer's life cycle or a customer's current sort of like financial situation, are you finding there's good uptake of open banking in terms of acceptance of it now? Because that was a big problem right at the very start. But are you running into that problem, I suppose, with the customers that you kind of see, or is it pretty much people are happy to use it because they really want the benefits or they need the benefits, and it's such a time saver?
I would say that the uptake depends on what you are giving back to customers. So that's the main variable. For example, with my accountancy software, I don't think twice to share all my banking data because it saves me so much time. So I don't think twice. Just take it. For other features, are like, I can't be bothered to share my banking data. Why would I? So it's what you give to the user. What okay, they give you their banking data, but what do you give them? What is the value you give them in exchange? So for benefit calculators, in a standalone basis, I believe the value we give in return is not high enough because you can pre-populate some fields like income or savings, but you cannot really populate much more. So I think the value exchange is not very favorable. So I don't see why people will share their banking data with us just for the benefit calculator. But when it's very powerful is when you have shared open banking data for some other things, for example, lending. I think the value exchange is more fair there because you can see the impact of sharing your banking data. Okay, if you share your banking data, I might give you a loan. If you don't share your banking data, I don't give you a loan. And because they already share their banking data, because they're applying for a loan, we can use that same data, well, not the whole, just a segment of the data to calculate benefits. So that's when it's really powerful. But benefits on its own, I don't see the power of it unless you are managing the benefit application, because it's almost like a lending process. Like, okay, if you don't share your banking data, I cannot give you the benefits. So it's up to you.
And I suppose some of that speaks to then having your process integrated within the lending process as an example, because then you can piggyback off the lending process, which has the value to then get the benefits process. But you're saying as a standalone, it's less compelling.
Yes, absolutely.
It's an interesting question.
We never try to do it standalone. We always try to do it as a part of another process.
Yeah. It's an interesting question in terms of like, how can you persuade people that there are benefits, even if they're not immediately obvious, but there might be benefits over the longer term in terms of like hidden benefits, and it becomes a bit of a marketing problem in terms of like, how do you persuade people that there actually is value from this, or actually demonstrate that you've actually got value from it, even if it's not immediately obvious, as an example.
But you got to find something immediate obvious, otherwise they won't do it.
Yeah.
Why would they?
Yeah.
Why would you?
Yeah. So it becomes a marketing problem. Like, how do you create that to make sure that people can really kind of see it? And before, we were just chatting a little bit about, I suppose, different stages in terms of like making compelling in terms of like benefits. And I think you talked a bit about awareness and I suppose monitoring and those kind of things. Does open banking kind of fit into that?
Yes. It's the ideal platform for achieving that, really, because you can update it now as frequent as you can, and you do that with the objective of helping people out. So we believe that open banking is the perfect platform over what we can build and integrate our benefit calculator.
And you mentioned before, I suppose, about the 3 stages of, I suppose, benefit take up. Maybe just chat through those a little bit in terms of like, it was awareness, and then sort of like the monitoring process, and I suppose the application process. And you guys probably fit in the application process. But what more do you think can be done across each of those 3 kind of areas?
So we are very focused on the awareness right now. So making sure that everyone is aware of the benefits they can claim. And by doing that, we're integrating with third-party services to try to reach as much people as possible to make them aware and proactively nudge them to make them aware of the benefits they can claim. The application stage is really, really, really hard because the welfare sector is really fragmented. So you have hundreds of benefits, grants, social tariff, devolved benefits, emergency grants, So you have hundreds of different providers, and every now and then there's new benefit, new grant. So it's really, really fragmented. So it will be ideal to have like a standard platform that everybody can configure their own benefits and you automate the benefit application. I don't think I will see that in my lifetime.
Yeah.
So I think is certainly there is technology. So the technology piece is super easy. There is already platforms you can use, and the technology piece is very easy. It's more about politics and people agreeing on a set framework. But I see that quite hard. And then the third part is the monitoring, like making sure you're claiming the right amount of the benefits, and making sure that when there is a new benefit available for you, and when the government or any local authority launches a new benefit, you automatically know about them. And there is the important thing is having your data updated. For that, there is nothing best than open banking. So with open banking, you always can do the benefit monitoring. I mean, you have to have another data sources, but open banking captures the most important, which is your existing benefits and your income.
And how much do you think that's going to change as we go into the future, I suppose, particularly if we enter a deteriorating cost of living situation? Do you think we'll see more digitalization or less digitalization? And I suppose one thing we can guarantee, I suppose, is going to be change, isn't it? And particularly, you just mentioned about monitoring and changing benefits potentially as well. I mean, what's your kind of view on the future?
The thing that worries me the most is there is a lot of ad hoc support at the moment. So the government or the different authorities, everybody really wants to help, right? Everybody's super keen and super eager to help, and that's fantastic. But the problem is that most of this help and support is completely ad hoc, and it's not like a standard framework that can be scaled. So at one point, we will spend more money and resources on managing the system than actually providing help to people.
Right.
So that's my main concern, that we end up with a super fragmented system. So I hope that after this initial crisis, because of course now it's all hands on deck and we have to make this support available as quick as possible. But I hope that stakeholders, maybe in a year or 2 years' time, they take a step back and they, say, okay, now let's try to build a platform, a system, a framework that makes things scalable. So the next time there is a crisis on this magnitude, it's almost like switching buttons, and support can be automatically distributed rather than councils going on one side, local governments going on another side, then charities on another side. So I think that's the main challenge and risk for me.
It's almost like it's that knee-jerk reaction: put something in quickly, and it's sort of quick, put in, and then it's forgotten about, I suppose, is it, rather than building even some of the integration that you were talking about that you'd like to see in terms of, I suppose, applying for benefits and those kind of things. That is just making sure that we're doing that, a little bit of that thinking ahead.
And then you see large banks managing their capitals with spreadsheets.
Yeah. So we've all seen that. So hopefully not this time, but So Manu, thanks very much for chatting to me today. I really appreciate it. I mean, you've made some great progress, and you can sort of see it in terms of like the adoption, and clearly it's going to become ever more important across all of this sector. Really, I'm just as we get into the cost of living crisis. So Manu, thanks very much. I really appreciate making the time today.
No, thanks, Chris, for having me again. And I love to chat about this, and I always listen to your podcast, so it's lovely to have you.
Thanks very much.